Tariffs, what are they? They're taxes imposed on imported goods. It's become an essential factor for investors to consider. They're typically used to protect domestic industries from foreign competition by increasing the costs of imported goods. However, tariffs may also be used as a geopolitical strategy or a negotiation tactic in trade disputes. Regardless of their intended purpose, tariffs can significantly impact businesses and economies, affecting investment returns. Investors can adjust their strategies and portfolios with tariffs in mind in several ways. By the way, tariff is imposed on imported goods. So if widgets are being made in Japan and the US and the US imposes a 15% tariff on imported Japanese widgets, it will increase the cost of the widgets produced in Japan that are being exported to the US. So say, for instance, the widgets manufactured in the US, it doesn't have to pay that 15% tariff to the federal government, but the Japanese manufacturer does. So one way that investors can respond to tariffs is by focusing on domestically focused companies. Companies that generate most or all of their revenue domestically should be less affected by tariffs and trade disputes than companies that rely heavily on international trade. Similarly, industries less insulated from global trade, such as manufacturing, might be a suitable strategy in a tariff-heavy environment. Another investment strategy, and tariffs are not, it's important, is diversification. It's a well-established concept in investing that helps manage risk by spreading investments across different assets, sectors, and regions. Investors can manage the impact of any single investment going bad. Diversification means investing in different sectors in different countries. By investing globally, one manages exposure to any one country's tariff policies. Investors may also consider companies that have demonstrated adaptability to tariffs. Some businesses have successfully navigated the tariff landscape by rejigging their supply chains, negotiating with suppliers, or passing costs on to consumers. It's important to note that while tariffs can create adversity, they can also create opportunities. For example, if a tariff is applied to a foreign product, it may be an opportunity for a domestic company producing a similar product to increase its market share. For investors, this could mean a chance to invest in companies that stand to benefit from the tariffs. As always, it's important to stay informed. Reading trends and predicting the impact of potential tariffs, as we've seen this year, can be challenging for even the most seasoned investors. Investing with tariffs in mind is about managing losses and maximizing gains by understanding the global economic landscape while mitigating risk. It requires a keen understanding of international politics and economics. Therefore, it's vital to rely on guidance from a financial professional who understands how tariffs and other macroeconomic factors impact specific investments. So, what it all boils down to is who pays the tariffs? Well, the company that's exporting goods to the United States is the one who cuts the actual check for it, but that could be paid directly or indirectly in a few different ways. First of all, the consumer could pay the price. So the Japanese widgets that used to cost $100, if they've got a tariff on them, they maybe start selling them for $115. And the math isn't exact, but you get the idea. Or the manufacturer could just say, hey, we're going to eat that $15 and we'll take less profit. Or sometimes if Japan's government wants to really prop up their widget industry, they could start sending money to help pay for the tariffs. Or there could be some combination of the three. The price could go up a little bit, the manufacturer could take a little less profit, and the originating country could pitch in. Bottom line is this. When you're out shopping, if the cost of the item's too much, consumers won't buy it. It all boils down to, is the price of what you're being asked to buy worth it to the consumer? So this is where you bring in a financial advisor because they'll think of things you won't. They will help bring perspective into the news of the day. If you have a financial plan, just continue to work it, and your financial advisor will help you make adjustments as necessary. If you don't have a financial plan, consider getting one. It may help you avoid expensive mistakes. Financial plan's always a good idea. There's a cost to it, but there's a cost to not having one. And the cost to not having one frequently is a surprise. So once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to your individual situation. During your working years, in my opinion, the most important question is, am I saving enough and is it in the right place? When you get on that glide path to retirement, the last 10 years before you retire, that's the thing I've said. Will the USS retirement be shipshape on the appointed day? When you get into retirement, the question is, how do I avoid running out of money before I run out of life? And legacy. Does what I worked hard for get to where I want it to after I'm done with retirement? I can be reached at herwirefinancial.com. I do in-person Zoom and phone appointments. I am licensed and registered across several states and can easily add states if there's a need. If you'd like to schedule an appointment, you can click on the schedule an appointment button in the upper right-hand corner of my website. If you want to see more videos like this, go to my website, click the YouTube button. It's that red one, 2 spots over from the schedule an appointment, and like and subscribe. If your friends want more information, they can follow me on Facebook, LinkedIn, or Twitter. For those who prefer the good old-fashioned telephone, I can be reached at 518-631-2569. Do not text that number. We'll both be sad because I won't get the text. There's a separate texting number there. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual.